Welcome to The Money Brief. I'm your host, and this is the show where we break down the biggest ideas in finance and business. No jargon, no fluff, just the stuff that actually matters. Today, we're going back in time, way back, to a man who, in 1929, the worst stock market crash in American history, didn't lose everything like everyone else. He made $100 million. In today's money, that's nearly $2 billion in a single crash, while the entire country was collapsing. His name was Jesse Livermore. Every serious trader knows the name, but knowing the name and understanding the system are two completely different things. Today, we get into the system. So in this episode, we're going to unpack exactly how he did it, his mindset, his rules, his secrets, and more importantly, what any of us can actually learn from him right now. Let's get into it. Jesse Livermore was born in 1877 in Massachusetts to a poor farming family. At 14 years old, his father pulled him out of school to work on the farm, but Jesse had other plans. With his mother's blessing, he ran away from home with just $5 in his pocket and ended up in Boston, where he walked into a stock brokerage office and asked for a job. They gave him one. His job? Write stock prices on a chalkboard as they came off the ticker tape. That's it. Just write numbers all day. But here's where it gets interesting. While everyone else just copied the numbers down, Jesse studied them. He started noticing patterns. Prices didn't just move randomly. They moved in ways that repeated over and over. So at 15 years old, he started making small side bets on stocks at what were called bucket shops, basically illegal betting parlors where you could wager on stock price movements with very little money. At 15, he placed his first bet, $5 on shares of the Chicago, Burlington, and Quincy Railroad at one of the bucket shops. He walked away with a profit of $3.12. That doesn't sound like much, but to a 15-year-old with no formal education and no mentor, it was proof that his pattern recognition actually worked. By his mid-teens, he'd already made over $1,000 from the bucket shops alone, a fortune for the time. By 23, he turned $10,000 into $50,000 in just 5 days on Wall Street. He lost it all shortly after, and then made it back and lost it again. He had no formal education, no mentor, no Bloomberg terminal, just obsessive pattern recognition, a notebook, and the kind of resilience most people never develop. So what exactly was he doing? Let me break down the 5 core principles that made Jesse Livermore one of the greatest speculators who ever lived. Secret number 1, the market is always right. Your opinion isn't. This sounds simple, but it goes against everything human psychology tells you to do. Livermore's rule was this: never act on what you think should happen. Only act when the market itself confirms it. He said, and I love this quote, "Markets are never wrong. Opinions often are." What he meant is that most people lose money because they fall in love with their own thesis. They think a stock should go up, and they hold it even as it falls, telling themselves the market is wrong and they're right. Livermore never did that. He waited. He watched the price action. Only when the market confirmed his view did he pull the trigger. Secret number 2, big money is made by waiting, not trading. This one surprises most people. They imagine a great trader constantly buying and selling, always in the action. Livermore was the opposite. He would sometimes sit in cash for months, doing nothing, waiting for the perfect setup. He described it like a cobra, calm, still, patient. And then, when the moment came, he struck fast and hard. He once said, "It was never my thinking that made me money. It was always my sitting tight." Think about that. The most valuable thing a great trader does is sometimes nothing. Secret number 3, read the whole market, not just one stock. Here's something almost nobody realizes about Livermore. He was the original macro trader. His biggest discovery, his own words, was that 40% of a stock's movement comes from the overall market, 30% from the sector, and only 30% from the stock itself. So before he ever looked at a single company, he asked, what is the market doing right now? What is the broader trend? If the market was falling, he didn't care how great a company looked. He'd short it, meaning bet that prices would go down and make money while everyone else panicked. This is how he made his $100 million in 1929. He wasn't surprised by the crash. He saw the signs months earlier. He positioned himself, waited, and when the bottom fell out, he was on the right side. Secret number 4, cut your losses fast. Let your winners run. Livermore had one of his most important rules written on his desk. Never lose more than 10% on any trade. If a position went against him by 10%, he sold. No questions, no hoping, no waiting for it to come back. But on the flip side, when a trade was working, he held it. He didn't take profits too early out of fear. He let winners develop fully. He called it, buy right, sit tight. Most amateur traders do the exact opposite. They hold their losers too long, hoping for a comeback, and sell their winners too fast, afraid to lose the gain. Livermore reversed that completely. Secret number 5, protect the capital. Always keep a reserve. After every big win, Livermore had a rule. Immediately withdraw half the profits and put it somewhere safe. Untouchable. He learned this the hard way. He'd made and lost enormous fortunes several times throughout his life, once going completely broke 3 separate times. And each time, the root cause was the same. He stopped protecting capital and started betting everything. He wrote, "When a speculator is fortunate enough to double his original capital, he should at once draw out 1/2 of his profit to be set aside as reserve. Capital is oxygen for a trader. Without it, you can't trade. So protecting it, even when everything is going well, is the most important discipline of all." Now, here's where I have to be honest with you, because this story doesn't have a clean Hollywood ending. Jesse Livermore made and lost enormous fortunes 4 times in his life. He went bankrupt in 1915, bankrupt again in 1934. He violated his own rules repeatedly, letting tips from friends influence his trades, over-leveraging, abandoning the very discipline that made him great. His personal life was also chaotic. Multiple marriages, legal troubles, years of deep depression. And in 1940, Jesse Livermore took his own life in a New York hotel room. He was 63 years old. The man who knew more about the stock market than almost anyone who ever lived couldn't save himself from his own psychology. And that's actually the deepest lesson in his whole story. The rules were never the hard part. Following them consistently, even when it's painful, even when you're emotional, even when you're winning and feel invincible. That's the hard part. He said it himself. The human side of every person is the greatest enemy of the average investor. Knowing the rules and living by them are 2 completely different things. So, what do we actually take away from Jesse Livermore's life? 3 things. 1, the market doesn't care what you think. It only cares what it does. Follow price, not opinion. 2, patience is a strategy. Waiting for the right moment, even if that means doing nothing for weeks, is one of the most powerful moves you can make. 3, discipline is everything. The best rules in the world are useless if you abandon them the moment it gets uncomfortable. Livermore knew this better than anyone. And it still cost him everything. His methods, timeless. His mistakes, equally timeless. And maybe that's the most honest thing I can tell you about investing. The market has been around for hundreds of years, and it keeps humbling the same kinds of people over and over for the same reasons. Human nature doesn't change. And neither do the rules for dealing with it.